Inflation has hit a 4-year low. CPI has come in at 2.8% in October. That's a significant slowdown from 3.8% recorded in September and is the lowest print since June 2020, which was during the COVID-19 pandemic. Falling fuel prices remain the primary factor behind the deceleration. Lower transport and food costs also contributed. The latest reading is below the Reserve Bank's target range of 3 to 6%. This gives weight to analysts' expectations that the Monetary Policy Committee will cut interest rates. That decision is due tomorrow afternoon. Retail sales ticked up in September, rising 0.9% year-on-year. That's thanks to gains at general dealers. The latest print compares to a revised 3.3% jump in August and marks the 7th consecutive month of growth in retail activity. Business confidence is on the up. That's according to the RMB-BR sentiment indicator. It rose to 45 index points in the fourth quarter from 38 previously. This marks the third consecutive increase in sentiment. RMB's Isaiah Mhlanga says the steady rise is encouraging and that the absence of load shedding and political stability following the election has helped the recovery, while an improvement in consumer demand further boosted sentiment. But Mahlangu's warned that we're not out of the woods yet, and that structural reforms, particularly in the logistics and water sectors, are necessary to lift the constraints on economic growth that will go a long way in supporting a continued recovery in confidence. A strong showing by its regional unit has given RFG Foods a boost. The firm, which owns Rhodes and Bull brands, says that segment delivered resilient revenue growth, with sales volumes rebounding in the second half of the year due to improved consumer confidence. And that supported an 18% rise in annual headline earnings. RFG's lifted its final payout by 79% and says it expects further improvement in volume growth at its regional unit over the next 12 to 18 months, as South Africa's improving economic outlook and upgraded growth forecasts are expected to stimulate a recovery in consumer spending. Raynet's net asset value has edged higher. The investment vehicles shared its half-year report, which shows NAV totaling 6.6 billion euros and says that reflects growth of nearly 7% when compared to the end of March. It's pointed to increases in the estimated fair value of certain investments, which include British American Tobacco, Pension Insurance Corporation Group and Prescient China funds, together with dividends received. 91 says it saw disappointing flows during its half-year as risk appetite and investor demand, particularly in emerging markets, remained muted. The group reported net outflows of £5.3 billion for the period and a 12% decline in headline earnings per share. Despite the performance, CEO Hendrik du Toit remains upbeat. He says he is encouraged by a significant improvement in inflows and business opportunities since September, and that in spite of cyclical demand headwinds, 91 remains committed to its focus area and chosen markets. Alongside the results release, 91 has announced a deal with Sanlam. The two parties have inked an agreement on investment partnership. This will see 91 take ownership of Sanlam's active asset manager, Sanlam Investment Management, and Sanlam will appoint 91 as the investment manager of Sanlam Investments UK. A total pool of assets of around 400 billion rand is expected to transfer to 91. In recognition of this, 91 intends to issue shares to Sanlam. This will give Sanlam a stake of about 12.3% in 91. Sanlam says the move creates a powerful partnership that aligns with its objectives and enhances its competitive positioning. Meanwhile, 91 believes the deal bolsters its South African market leadership. Momentum had a strong start to its 2025 financial year. During the first quarter, recurring premiums rose 8%. The value of new business increased 5% and assets under administration for Momentum Wealth jumped 17%. The firm says it is encouraged by its new business sales performance given the weak economic environment and increasing competition. Looking ahead, Momentum is cautiously optimistic. The business believes South Africa is in for an economic recovery as inflation comes off the boil and interest rates reduce. This should alleviate some pressure on disposable income. Nepi Rockcastle's operating income has continued its upward trend, registering growth of over 12% in the third quarter. The firm, which owns premium shopping centres in Central and Eastern Europe, has pointed to higher rents and short-term income. CEO Rudiger Danny has said that management's embarked on a major strategic plan to take advantage of current market opportunities and position the group for long-run sustainable growth. Advotech has named a new chief financial officer. The private education group says Hannes Bunzaya, who is currently the CFO of healthcare company Afrocentric, will take up the role from February. He will succeed Didier Oesch, who retires 2 months after that. And Lesaka Technologies has bought a recharger. The deal carries a price tag of 507 million rand. Recharger is a local prepaid electricity sub-metering and payments business and has a base of more than 460,000 registered prepaid electricity meters. The transaction marks Lesaka's entry into the South Africa's private utility space and boosts the firm's alternative payments business.